Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Lululemon. That's a big earnings after the close. Shares are down nearly 30% so far this year, off of those all-time highs that we saw last November. But Andy, with this type of demographic, as far as a brand, right? Lululemon, high-end, maybe not as affected by the inflationary pressures that are out there. You know, the economy has opened up over the last 6 months or so where people want to get out. Are you seeing that positive data out of LikeFolio based on maybe the positive signs out there for a company like this?
Yeah, absolutely we are. You know, and the company said so in its last report. You know, they raised guidance going forward. They said that customers really just weren't balking at higher prices, at least their customer base. You know, and so when we look into Lululemon, we note, you know, this is a company that's really focused on expanding the demographics that purchase from them. And as far as LikeFolio data is concerned, we're seeing really good traction out of their menswear section. And this is one that they're really honed in on. And at LikeFolio, we're seeing a 56% year-over-year increase in customers talking about Lululemon's menswear products, which I think is really remarkable. It tells me that this company could go a lot broader. You know, they're adding a golf line, a tennis line, even a hiking line. So this isn't a company that's just about yoga anymore. And I think they're doing a good job with that product expansion. You know, from a macro side of things, you know, you just referred to things are getting back open. People are getting more comfortable getting out and about. We're seeing, you know, kind of that flippening of what happened with COVID, where now working out from home is starting to be something on the decline, whereas group fitness classes are really starting to come back in a pretty strong way. And that really benefits a company like Lululemon, because when you're working out at home, it really doesn't matter that much what you look like. You can put on those old sweats, those old shorts, and a tank top and just get it done. But when you're going to a group fitness class, it's a social experience, and especially for a lot of ladies, it's a chance to feel good, look good, and get out and do something fun with your friends, and maybe you know, go for brunch afterwards or something like that. So you want to look good, and you want to wear top of the line stuff, which is what Lululemon has. So Lululemon, I really think, is hitting on its strategic objectives in terms of broadening the product lineup and benefiting from the macro trends that the company has working for it, that have been working against it, at least for the last couple of years. So all signs pretty good for Lululemon, despite the recent stock price woes.
Look good, feel good, play good, Andy, is kind of the idea with Lulu. You know, the question is, though, you know, they're growing. They continue to grow. The numbers they're putting up are still showing growth. And the question, though, is with a recession looming, or whatever slowdown this is going to evolve into, is the brand power of this name enough to get it through that? Is the men's and the footwear, is that enough to keep this company growing throughout this? Because you're right. Their 5-year average for PE is about a 54. It's a 36 right now. So we were just talking about an overall market that's not necessarily cheap yet, but compared to the last 5 years, Lululemon is cheap, Andy.
Yeah, it's cheap versus itself. You know, it may not be the cheapest, you know, PE ratio that you can get on the market, but it is cheap versus itself, and the growth rate is still very good. You know, LikeFolio data suggests that the growth rate will remain strong into the future. I think their footwear line is starting to make some inroads. You know, when we compare Lululemon, the brand, and its mentions, the consumer interest in this company, versus competitors like Under Armour, versus Nike, versus Gap, you know, it's really winning that battle. It's there's one private competitor that I think is extremely competent that Lululemon probably needs to keep an eye out for. It's called Vuori. And they make really high-end, you know, extraordinary quality, competitive products to Lululemon. So that's one to keep an eye out for. You know, it's not a public company, but it is up and coming. So we always like to keep an eye out for that competitive strike that may occur. But among large cap companies, among the really active wear community, Lululemon's brand is as strong as ever and expanding the product line at the same time, which is hard to do. And Lululemon's pulling it off.
Yeah, to that point, Andy, there's a few other competitors in there, that might be taking share. We're seeing some gross margins start to decline a little bit just due to the cost, the inflationary cost to make their products. But I always go back to Jenny Horn, the host of one of the shows here on the network, and for any info on Lululemon. And she told me about the belt bag craze that's been going on. I guess it's like a, I don't know, knapsack around your waist or something. She and all of her friends wear it. Are they expanding their product line enough to keep people interested? Because that's always what Nike's been able to do pretty well. What's hot at the moment and expand on that. Is Lululemon doing that according to your data where, hey, a new product like shoes came out. Now they've got their hip sack that's out and everybody's wearing that. Are they keeping up?
Yeah, I think they are. LikeFolio data shows that they are. And like you, I'm not probably a big Lululemon guy, but, Megan Brantley here in the office told me right before I came on, every time I let one of my friends wear these, let's see, what was it called? Rest Feel slides, which is their footwear product called Rest Feel. She said, every time I let one of my friends wear these, they end up buying a pair. Because they're so comfortable. So I think even in footwear, they're coming along. And I do think that it's important for investors like us who may not have, a ton of personal experience with the product to talk to people that do. LikeFolio data is an amazing way to get that broad view of how consumers feel about things. But talking to someone individually that's either obsessed or on the outs with the brand can be eye-opening for an investor. So I think that's a smart thing to do. And most of the time when you talk to people that are Lululemon customers, they're pretty loyal and they're pretty happy and they're spending more money every year with the company. And I think that will continue in recession or no recession. Lululemon, whether the stock's expensive or not right now, we'll let the market decide that. But from a corporate perspective, how the company is growing the brand, just absolutely phenomenal execution. We expect that to continue.
Andy, one last thing. First and foremost, this product that you and Jenny are describing sounds a lot like a fanny pack.
That's what it is.
Yeah, exactly. It's just a renamed fanny pack. Let's get it right here.
I couldn't think of the name.
Yeah, but Andy, on your data, your 90-day data, you've got Under Armour up 23%. Do they have a heartbeat, Under Armour? Because we haven't heard anything about this company in a long time. Or is this just coming off almost zero to a small gain? With stocks, sometimes you have a dead cat bounce.
Yes. I think, we're going to have to wait and see on Under Armour. Like you, I'm a little skeptical. I want to see more, especially as we get into the holiday shopping season. Lululemon has a really strong brand. We expect them to power through the holiday season. Not so sure about Under Armour.
Yeah, that one's a wait and see, I think, for a lot of investors, just due to, if you've seen the stock price, it's been pretty dismal to say the least. Now, Andy, do you guys have an earnings score going into this report after the close?
Yeah, we were moderately bullish at the beginning of the week, but now I feel like the market's given us quite a gift here with a big pullback, and so we're going to take advantage of that, be pretty bullish going into this one.
All right, great stuff. As always, Andy, appreciate all the data that you're giving us here.